Hello everyone and welcome to Living Finance. Today, we review the latest news and development in the crypto market space. Today's episode discusses the proposal for adoption and inclusion of Bitcoin in 401k by Fidelity Investments, and Bloomberg reports on the future of Bitcoin, Ether, and crypto assets. We review the reports by Bank of America on digital asset class, the development and regulation of virtual assets by government of Dubai, and the regulatory concern by the Securities and Exchange Commission regarding digital assets and cryptos in particular. Stay tuned. Subscribe if you haven't subscribed. Share this video, like, and comment in the comment section below. Welcome on board, relax, and let's have a conversation around crypto. America's largest provider of 401k savings account, Fidelity Investments, plans to allow investors to put a Bitcoin account in their 401k. Fidelity Investments is the first major retirement plan provider to do so. About 23,000 companies that use Fidelity to administer their retirement plans will have the option to put Bitcoin on the menu. However, this option is not immediately available to employees. This product is expected to be available to customers in the summer of 2022. Clients can opt to add Bitcoin to their retirement savings account. The plan is to allow employees to save up to 20% retirement in Bitcoin. If this is adopted, it is a big win for crypto enthusiasts, we must confess. Fidelity Investment Plan can be seen as an express endorsement by the largest retirement plan provider, which may indicate that crypto investing may be heading to the mainstream, with the potential of adoption by other retirement benefit of service providers and mainstream investment companies. As you know, Bloomberg, Bank of America, and most of the retirement big financial institutions are presently conducting a research, and some have conducted research into crypto investments, blockchain technologies, metaverse, and the disruptive financial instruments. However, it is important to know that the Director of Labor Department, or the Department of Labor, is critical of this proposition by Fidelity Investments. Stay tuned. On this broadcast, we're going to review the impact and also some of the research conducted by the mainstream financial institutions. Do you think Bitcoin is going mainstream? It is important to note that this is Bitcoin. Not all cryptocurrencies have been added to the next egg of employees. This is big news. There's no pretenses about it. There's no way we can try to navigate away from the truth. And this is a huge win for crypto enthusiasts. They believe the adoption or the proposition by Fidelity, although there are concerns by the Department of Labor about allowing employee retirement to save up to 20% or even adopt or save any part of their funds in crypto or Bitcoin, presents risk to retirees. But let's not fool around. This is a very, 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 very essential news for those who want you to believe that the crypto space has come to stay and is going to the mainstream. Like we've said in our previous videos, there's no gainsaying that the technology presented by Bitcoin and blockchain technologies that seems to be the foundational or engine room of cryptocurrency and decentralized apps is in itself disruptive. The question is taking it further to allow retirees to save in Bitcoin and adopt any of the cryptocurrencies. But majorly what the Fidelity Bank or Fidelity Investment is talking about is allowing retirees or employees or employers to allow their employees to save up to 20% or more, or save Bitcoin or use Bitcoin as a menu in their retirement saving. Now, Bank of America is thinking crypto. Bloomberg is thinking crypto. And they are all gearing towards Bitcoin. Is Bitcoin the new digital gold? What does it present? What feature does it have? Do you think Bitcoin is going mainstream? What do you think regulators would say about this? Do you think the SEC and the regulatory authorities will allow retirees or employers to allow the retirees to save in Bitcoin, knowing or understanding the volatility of Bitcoin in the market space? We cannot say for certain what regulators will say, if there's going to be a cap to it, the amount they can save in Bitcoin or any other cryptocurrency. Now, for you to understand the foundational nexus of crypto, please listen to our other videos in this channel. We've taken out the time to discuss Bitcoin, the evolution of Bitcoin, the evolution of cryptocurrencies, the inherent risk, and the crypto scams. If you haven't subscribed to this channel, please subscribe, share, and like the video. Let us know the topics you want us to, bring to this space. Hello everyone and welcome to Living Finance. This platform presents a recent analysis in finance, the economy, crypto, stock market, electric vehicles, artificial intelligence, healthcare, and how policies in these sectors affect personal finances. Please subscribe, share, and turn on the notification button. Some of the employees in the Department of Labor are critical of this proposition by Fidelity Investments. They believe that to allow investors to put Bitcoin in their 401k account presents risk to the retiree security of Americans. The acting secretary of the Employee Benefit Security Administration stated that there are grave concerns with Fidelity's plan. However, there is no certainty that employers or employees may even sanction a digital asset account for their employers, right? So the employers may refuse to sanction these accounts for their employees. And employees may also refuse to adapt or save their retirement or add Bitcoin to their retirement account. But the truth still remains that some people may be tempted to do so, right? Whether it presents benefit or risk is subjective, dependent, but there are objective indices in which you can use to compare traditional investment or traditional asset classes to crypto asset classes. And for this reason, stay tuned. You'll be surprised or amazed to see what Bloomberg has to say, Bloomberg Research has to say about the comparison between crypto assets and traditional asset classes. You'll be amazed. Stay tuned. More traditional institutions are beginning to think digital. They are beginning to consider the digital asset classes. Dubai has also considered it. We are going to review the extent to which the government of Dubai has gone to review or adopt or thinking of adopting digital asset classes, right? You'll be surprised to know that a county in Virginia pension fund is also thinking crypto. Bank of America has commissioned a research on digital asset classes. To go straight to this, we discuss Bank of America. We'll come back to discuss about Dubai. We'll come back to discuss the Virginia County Pension Fund and also Bloomberg reports on digital asset classes. Bank of America is a traditional American financial institution, and now they are thinking crypto, digital assets, and they have commissioned a report. According to the report, it was stated that digital assets have the potential to transform industries, improve efficiency, and reduce friction across transactions. Bitcoin is important, but the digital asset ecosystem is so much more. Our research aims to explore the implications across industries, including finance, technology, supply chain, social media, and gaming, according to the head of Bank of America Global Research. Digital assets are transforming the way in which market, businesses, and central banks operate. And Bank of America offers a market-leading global payment platform and blockchain expertise. And the addition of digital asset research further strengthens the depth and breadth of our offerings for investors. So it's written in gold. They are considering it. It is no longer hearsay. They don't want to miss out in the volatile crypto or blockchain technology market space. They possibly would want to open up the space for their retail investors. I do not know. They haven't made that open to us yet, but they are considering it. They have a research going on in that regard. Now, you compare this to what Bloomberg has said about cryptocurrencies, the technology blockchain. You'll be amazed. Bloomberg in itself, I'm just going to read it out and quote. I'm just going to quote it out for you to understand the thinking of Bloomberg in regards to digital asset classes, especially Bitcoin, Ethereum, and Solana. In a publication by Bloomberg Intelligence, Crypto Outlook, Crypto Beating the Ebbing Tide, it stated that the fact that the world's most fluid 24/7 trading vehicle, Bitcoin, was down only 15% in 2022 to May 3rd, compared to 20% for Nasdaq 100 stock index, may portend that crypto is transiting to a risk-off asset. You have to underline the word risk of asset. You have to also underline the 15% of Bitcoin loss compared to the 20% of Nasdaq 100 stock index loss. So it means, taking this into common arithmetic, it means that Bitcoin outperformed Nasdaq 100 stock by 5%. Bitcoin lost 50% throughout this period, and Nasdaq listed 100 stock index lost 20%. And according to Bloomberg, it means it's gradually transiting into a risk-off asset. He also stated that the crypto market trajectory may outperform stocks at the start of May. Bloomberg remarked that crypto market is positioned to outperform the stock market. This is huge. Coming from Bloomberg. Bloomberg further remarked that Bitcoin is positioned to outperform more entrenched asset classes. You're talking about gold, diamonds, and those safe haven asset classes. So, they are of the view that cryptos may outperform them. But you have to take into consideration, we're not talking about the meme tokens here, right? We're talking about a few of the crypto assets. And in this particular report, Bloomberg was very particular about Bitcoin, Ethereum, and Solana. So don't consider the meme tokens as part of those asset classes. Those meme tokens have no fundamental, no real fundamental, no blockchain technology driving them. They are just plugging create meme tokens and plug it into existing blockchain technologies, and of course, take money from people. So you got to be careful here. We're not asking you to make investments. We're asking you to be very vigilant with your resources. But we're only trying to say, I'm trying to bring this to your space to make you understand that more traditional institutions are beginning to think digital asset. And Bloomberg is one of the most respected financial institutions, of course. For them to be considering this and putting this out in the market space or in public space, it means they are thinking big in this regard. But be careful. Bloomberg also noted that Bitcoin has great potential and will outperform most traditional asset classes. Again, Bloomberg said that with the maturation of crypto, Solana will be amongst the top 5 cryptos, with Bitcoin and Ethereum amongst the leading cryptos. Just like we said, these companies are fundamentals. They provide something to the market space. They have blockchain technology that could be adapted by different institutions in solving problems, real life marketplace problems, not meme tokens. It also observed that the short-term decline of Bitcoin has a potential for upscale. Okay, it means that Ethereum, Bitcoin, although low today, during this sell-off period, has also potential for higher yield for those that have the long-term funds to wait if they make the investment today. You must understand that the federal hike, the Fed rate hike, inflation, and all the economic distortion in the market space now has added to the decline in most of the traditional asset classes and also crypto classes, established crypto classes like Bitcoin, Ethereum, Litecoin, Solana, and the rest of them. However, Bloomberg predicted that Ethereum would have an asset-based price of between $2,000 to $4,000. Beyond the pricing of the currency itself, the technologies Bitcoin provides, Ethereum provides, Solana provides, and Litecoin provides is open for broader market adoption. The fundamentals are huge and great to the market space. They are not meme tokens, so to speak. We're not talking about the price of this asset itself. We're talking about the underlying technology, the potential of the underlying technology. And here today, Bloomberg is thinking crypto. They are looking into the future of crypto, the potentials of crypto in the market space. So think about it too. Now we move to Dubai. The government of Dubai is not slowing its effort down in the crypto space, in the virtual asset class or digital asset class space. As a result, on May 3rd, the Dubai government bought a space in the Sandbox metaverse meant for the development of the virtual headquarters of the Dubai Virtual Asset Regulatory Authority. I think this is the first the first country to actually think and even go to the extent of buying a space in the metaverse to create their headquarters or thinking about regulating digital assets. And to crypto enthusiasts, this appeals to them. The question is, what would the regulation be all about? Do we have the blueprint of how the regulation will be? What the regulation entails? Are they going to be crypto friendly? Or are they going to provide roadblocks, to crypto enthusiasts? But the most important thing is that the government of Dubai is thinking virtual. They are thinking crypto. They are thinking the Web3 metaverse, and they have gone ahead to actually buy a virtual space to build the headquarters of the Virtual Assets Regulatory Authority. I think this should be applauded by everyone, for their incisiveness, the thoughtfulness of this government. So we're going to get deep into it, and we're going to be talking about what this entails, the remarks from the head of the regulatory agency, His Royal Highness Sheikh Hamdan bin Mohammed bin Rashid Al Maktoum, the Crown Prince of Dubai and the Chairman of Dubai Executive Council. He stated that Dubai maintains a leading position at the forefront of technological transformation. We have exceeded the role of early adopter to become an innovator and participant in shaping the future of this technology. Today, Vera joins the metaverse to become Dubai and metaverse first government authority, ushering a new era in which Dubai government utilizes modern innovation to extend its services and regulatory power to audience in an open technological expanse without constraint or borders. Vera represents a serious effort to build a new, powerful economic sector that contributes to the nation's economy and creates new investment opportunities, and this is possible through the safe and modern regulatory solution we envision. Our presence in the metaverse, therefore, marks the beginning of a new phase in Dubai government's march for the future, one that will be a positive impact in the long run. Wow! We have to applaud them for thinking future, right? And crypto enthusiasts are in love with this remark. By expanding Vera's resources to a borderless audience through the metaverse, Dubai is creating a prototype, decentralized regulator model, inviting international thought leaders, global authorities, government custodians, and industry shapers to participate, exchange knowledge, and problem solve collectively so that we can enable the dynamic virtual asset sector to build economic resilience, accept social inclusion, and address environmental sustainability. This is excellent. The Director General, Dubai World Trade Center Authority, stated that Dubai views the virtual asset industry as a driver of global future economy. As the first niche regulator for the VA sector globally, Vera's metaverse headquarters also makes UAE the first jurisdiction to enter this platform, reflecting our leadership and aspiration. And I agree. We agree. Dubai, the government of Dubai should be applauded, just like we said in our previous episode, right? That you have to understand what this technology is all about so that you don't fall victim to scams. Now, they have bought a land in the metaverse in Sandbox, you see? So it means that Sandbox has a utility. Sandbox provides utility, which means people can make purchases, people can build their brands, their virtual real estate in the Sandbox metaverse, and thereby Sandbox earns revenue. So Sandbox is solving a problem, right? Unlike most of the cryptocurrencies that are just meme tokens that has no utility, provides no utility at all. So we must applaud the government of Dubai for their forward-thinking effort to regulate the metaverse space, to provide investors protection, to also allow collective thought leaders to come together to solve real-life problems. We applaud them. Welcome, Dubai. Now we talk about the happenings in the country of Liechtenstein. Of course, if you don't know Liechtenstein, if it's your first time of hearing about Liechtenstein, Liechtenstein is one of the safe havens for billionaires, the private banks for billionaires, tax haven where most billionaires put their money. Now, the news coming from Liechtenstein is that their largest private bank enables direct deposit in Bitcoin. The LGT Bank joined forces with SEBA Bank to allow direct investment in Bitcoin for their clients. You know, the currencies included, the cryptocurrencies included in this arrangement are Bitcoin, of course, the father of all cryptos, and Ethereum. The LGT ecosystem allows individuals to make deposits in these currencies. According to the LGT Bank and the SEBA Bank, the demand by their customers to invest in digital assets has grown exponentially over the years. And now they have allowed their customers and their clients to make deposits in the two cryptocurrencies that is hedged against the US dollar, okay? Cryptocurrencies, Ether and Bitcoin. The CEO of the bank, Roland March, stated, "We are very pleased that we can now offer our clients convenient access to these markets while upholding the highest security standard. We worked intensely on this offering. Cryptocurrencies are still in a stage of dynamic development. LGT therefore first created the corresponding necessary processes and framework for this type of investment. The surprising aspect of this whole arrangement is that the LGT Bank says that the rules for investing in cryptocurrencies will be the same rule as investing in traditional asset classes. So it means they did not factor in the volatility of the crypto asset, or they are considering crypto assets to have matured to traditional asset classes. And so the rules are the same. Well, let's see how that works out. That's good news for crypto enthusiasts as well. It means gradual adoption jurisdictionally and also by high net worth clients in some of these very rich safe havens. And also it stated that the people will receive the same documentation for their tax and their tax returns. The funds can be easily accessed and available when they sell. They don't have to worry about password and keys and login and all of that. That's interesting. The partnership between LGT Bank of Liechtenstein and the crypto bank is in Switzerland. It's called SEBA Bank of Switzerland. So these two companies came together to create this portfolio for their investors, for their clients, for their high net worth clients to be able to buy, sell, and also save in cryptocurrencies, Bitcoin and Ether to be specific. So we're going to be looking at Cardano, what Cardano is doing, what the MD or the creator of Cardano is saying, Charles Hoskinson saying. Do you really think Cardano has any future? What are the fundamentals of Cardano? Or do you think he's granting more TV interviews and more press interviews and working to develop, Cardano to allow investors make more money? Let's return to that. If you haven't subscribed to this channel, please subscribe, share, and like the video. Cardano by market capitalization is one of the most beloved cryptocurrencies by crypto enthusiasts. They believe in the crypto project and they have faith that it may also, make them rich. Whether that would happen depends to be seen. But yes, Cardano has some fundamental market utility. They provide real life situations. They provide real solutions to real life situations, right? Now, whether the price of Cardano is going to be huge in the future is something we cannot say. But Charles Hoskinson, which is the co-founder or the founder of Cardano, has been in the news, or is always in the news, talking about the project, what he intends to achieve with Cardano, right? And he was quoted as saying that blockchain can be most effective anywhere you have a consortium of actors who have to work together, who don't necessarily trust each other, but need to work together for the market to form. He stated that it could be a voting system, a supply chain system, or a medical record system. And he gave an analysis or an analogy where he talked about somebody who fell off or had an injury while, on vacation and what have you, and needed his medical record. But because of lack of trust, the record may not be easily available to the doctors. But what he's trying to say that centralized system has trust issues, and decentralized system has no trust issues because the information is in decentralized platforms without a centralized control. And what he's trying to say is that blockchain provides that decentralized app. So I agree. But the fundamental question is, how is Cardano adapting this technology to solve real life situation at present? And what return, if any, what are the potential for those who have, kept faith with Cardano? And if you can solve some of these riddles, you can also take a look or make a forward-looking projection about Cardano, what it provides in the market space. And he was quoted as saying, so what you can do with blockchain is to remove that central party and then basically have a common logic. And they could all work in a decentralized way instead. Now, for you to understand the crypto space, the blockchain technology, and what it provides, we suggest you watch our video on Bitcoin. You can understand the fundamental principles of decentralized app, decentralized technology, and how it works. I love Cardano. I think Cardano has real market fundamentals, but we are not making any buy recommendation about any cryptocurrency. Please do not buy. Make sure to consult your financial advisor before making any financial decision. This video and the broadcast and the information contained here does not make any market projection or does not advance any market participants or any product in the market space or urge you to buy any of these assets. You must make an informed decision. Consult a financial advisor before doing so. Now we come to the regulatory aspect of crypto. Of course, you already understand, or if you don't know, if you're new in the crypto space, you will understand that crypto is filled with a lot of what they call the rug pulls. the scams, the wannabes, the people who create meme tokens with no fundamental utility in the market space. Their desire is just to get rich quick. They do not provide any fundamental utility. People buy these cryptos and they lose their money. So in order to address this, the Security and Exchange Commission is hiring cryptocurrency cops to investigate illicit activities in the crypto space, right? In the light of the swift ascendancy of cryptocurrency and the mass adoption of digital assets by novice investors, the Securities and Exchange Commission has added 20 additional positions as cryptocurrency cops to investigate the happenings in the market in response to market manipulation, of course, in the crypto space. You know, the crypto space, according to SEC, is worth about $2 trillion in valuation. The Crypto Asset and Cyber Unit will have the responsibility to investigate, audit, examine, and potentially prosecute security violators, people who have violated the security laws in the crypto-related industry, people who offer cryptocurrencies or crypto or any of those tradable assets in the crypto space just to defraud people, right? So to protect investors buying, selling, and trading digital assets in crypto market, this new hire, they are the new watchdog. You gotta beware for those who creating meme tokens and making the crypto market space to look crowded with fake projects. Beware. Welcome, SEC. We welcome you on board. Remember, the information contained in this broadcast is not investment advice. Please do not rely on it to make any financial or investment decision. Consult a licensed investment advisor before making an investment decision. Thank you.